Yes.
Oh, thank you. Hi everyone, my name is Jasper and today I have a fantastic idea for you, as I'll be pitching a stock Logitech International SA. The current price as of 31st of March is 104 and I believe there's an opportunity for a 59% upside. When you think of Logitech, do you think of mouses and keyboards? Well no, Logitech is not just about that. In recent years, Logitech has expanded into categories like streaming, headsets, video conferencing, and more. Logitech's products can be separated into 5 key categories: creativity and productivity, gaming, video collaboration, music, and smart home. Logitech owns a diverse portfolio of companies including Logitech, Logitech G, Astro Gaming, Streamlabs, Ultimate Ears, Jaybird, and Blue Microphones. If we look at the consumer technology electronic industry, it was valued at around $1 trillion in 2019, and it is expected to grow at a compound annual growth rate of over 7%. Note that the industry is highly competitive, which leads to a decrease in product life cycles, and companies have to innovate and compete against each other. In general, COVID has had a positive impact on the industry, especially on the computer and peripheral segment, due to consumers working from home. Therefore, they have to rely on consumer electronics as a means of communication. Depending on the segment, the categories that Logitech are in are projected to grow at a compound annual growth rate between 9 to 17%. The key competitors of this industry are Sony, Microsoft, Apple, and Samsung. If we look at the financial history of the company, the revenue has been increasing around 300 million year over year and surged in the last 12 months as COVID hit. The EBITDA growth in margins as well as the operating income and margins also have been increasing at a steady rate year over year, and the free cash flow has been positive for the past 6 years and has been at its highest point during COVID. Leading to my investment thesis, Logitech exceeds consensus expectations through the following 4 points: attractive fundamentals, growth opportunity, brand name and diverse business model, as well as scaling power of Logitech. So to my first point, attractive fundamentals. In fiscal year 21 quarter 3, Logitech announced that its revenue rose 85% year over year, its operating income grew 214%, and its adjusted gross margin grew from 37.6% to 45.2%. If we look at Logitech's fundamentals, its DE ratio is at 0.59, its net debt to EBITDA ratio is negative 8.26, its return on equity is a staggering 54.51%, and its EV to sales multiple is at 3.66. Despite Logitech's excellent quarterly results, excellent fundamentals, little debt, high return on equity, if we look at the top graph, we can see that Logitech's PE ratio is at its all-time low at 19 times. I mean, can you believe that? The bottom of the graph shows that the stock price is not reflecting earnings. Now, some might come into the conclusion that the industry is trading in the same rates, but that's not true. According to the comparable company analysis, the PE ratio of Logitech is significantly lower than its peers, despite having the most growth. The bottom shows that the EV to revenue ratio is low compared to its industry peers, so some might wonder now, why is the price not reflecting earnings, which leads me to my second point. The market thinks that demand for video collaboration, creativity, and productivity and gaming peripherals will plummet post-pandemic, while I believe that companies will move into a more hybrid work setup post-pandemic, and there are 4 long-term secular trends that will lead to significant growth for Logitech. Firstly, it's increases in workspaces. Then it's video calls replacing audio calls, and then gaming will become the most popular sport in the world, and entertainment will shift from more big companies like Netflix and Disney to each other like YouTube and Twitch. Moreover, there are huge growth opportunities in untapped and emerging markets, especially in China, where esports is becoming more and more popular. Moreover, gaming peripherals is also a huge opportunity, as Logitech is currently top 1 in the peripherals gaming market, which is poised to grow at a substantial rate. Logitech's partnerships with League of Legends, esports teams, influencers, tournaments is a huge competitive advantage. Last but not least, Logitech is expanding its demographics to target female and adolescent demographics, which is also a huge untapped market. So my third point, brand name and diverse business model. Logitech, as a leader in the peripherals industry, similar to Apple, Logitech is associated with high quality, reliable, simple yet effective products, which allows Logitech to charge a premium. The brand name is only going to continue to expand as Logitech creates more products and partnerships. The diverse business model from merger and acquisitions and also expansion into new categories creates a wide customer base for Logitech. So on to my fourth point, scaling capability. So ever since the pandemic, Logitech has been generating more revenue and free cash flow, and with a current ratio of 1.9 and little to no debt, Logitech can definitely scale its business through increasing marketing, research and development, or even new M&A deals, which will definitely lead to future growth. Onto the competitive positioning. Logitech has a narrow moat. Now, it is important to note that it is hard to establish a competitive advantage in this industry due to the short life cycles of products and competitiveness. So in terms of intangible assets, Logitech has an intellectual property portfolio of more than 750 patents and a huge brand name, as it really talks about. And in terms of cost advantages and efficient scale, Logitech produces its products in large volumes as it is an industry leader, and which allows for economies of scale. And Logitech also has automation expertise, with 30% of its production being automated. And if you look at the Porter's five forces, the bargaining power of customers is low, intensity of competitive rivalry is significant, bargaining power of suppliers is insignificant, threats of substitutes is moderate to low, and threats to new entrants is low. Now on to my intrinsic valuation. So to calculate the intrinsic value of the stock, I use the perpetuity and exit multiple DCF method to calculate the target price. So I first projected revenue, gross profit, and finally the future unlevered free cash flow for a more accurate representation. And then I count for the exit multiple. I use the median EV to EBITDA from my comparable company analysis, and also for the perpetuity growth rate, I chose a conservative 1.5%. And for my discount rate, which is the weighted average cost of capital, what turned out to be 7.97%, which also turned out to actually be the cost of equity, or CAPM, because Logitech has no interest expenses. And then I calculated the enterprise value to find the equity value per share. Finally, I conducted a sensitivity analysis to see how changes in exit multiple, perpetuity rate, and weighted average cost of capital will affect the target price. Now, on to the investment risks and mitigates. Well, Logitech is in a fast-paced industry, as already elaborated, and also there are definitely risks to China and US relations, as well as COVID. And also, finally, threats of new substitutes and new entrants, especially large corporations like Microsoft, Sony. However, Logitech is already in the process of expanding into new categories like AI and the virtual or augmented reality space, and is constantly developing new products and innovations. And onto the ESG factors, Logitech is an industry leader in the environmental space, as it designs a large percentage of its products out of recycled plastics, and it's also the first consumer electronics company to provide detailed carbon impact labeling on its products. Logitech is also on the Dow Jones Sustainability Index and FTSE Good Index, and has won numerous sustainability awards. Moreover, Logitech has multiple initiatives like Logicares, which focuses on giving back to the community, and also has partnerships with Girls Gotta Run, Girls Who Code, HopeCam, and more. Moreover, Logitech has supported the community during the pandemic through donation, making masks, and also video-enabled telemedicine cards in Wuhan, and more. Moreover, Logitech has corporate governance principles and code of conducts, and Logitech recently announced a diversity pledge on commitment to diversity action. Logitech is growing an inclusive culture, supporting underrepresented employees, and changing the way we do business. So now on to the update since April, which was the last time I pitched the stock. So they filed their fiscal year 21 10K on the 12th of May, and the key highlights were the net sales increased 74% from fiscal year 20 to fiscal year 21. Then its operating income tripled to 315% year over year. And it also announced a 10% annual dividend increase for fiscal year 22 for its stock. And also the board recently approved an increase in the share buyback program from 250 million to 1 billion, which definitely shows that the company is confident with its future growth and shows that the stock is undervalued. And the stock price as of today, I just checked today, was at $122. And when I actually did the stock pitch competition last Saturday, which was just a few days ago, it was actually at $110. And I still feel like the stock is a strong buy due to the points above, and also due to the fact that my investment thesis is still intact. Thank you so much. I'm open to any and all questions.
Thank you so much, Jasper. That was great. I'm going to default to Deepika and Greg. You guys get one question each for Jasper. Deepika.
Great. Yeah, great presentation, Jasper. Thanks so much for joining. I think when you started the presentation by saying that you were expecting a price appreciation of 59%, I was hooked. I wanted to hear your argument. So, when you showed the DCF analysis, the numbers pan out. I did see that in the kind of earnings expectations and the gross margin expectations for future years, you did kind of bring them back in line with 2019 and not maintain them at the COVID level. So that's great. In terms of when you did the DCF analysis, did you include any assumptions around kind of the acquisitions or kind of the growth ambitions that Logitech has, and kind of how did you consider those as part of your analysis?
Yeah, thank you so much for your question. So for basically my DCF model, I did take into consideration, as you talked about, the acquisitions and also the future growth opportunities. And I actually, to be honest, I was very conservative with my DCF uh, because obviously it's hard to predict the future, and this can be shown as I actually used a perpetuity growth rate of 1.5%, and usually in DCF models you would use somewhere between 2 to 3%. So yes, definitely, I definitely feel like this stock has great opportunities because, as you can see in my DCF model, I was very conservative, and also the stock price is currently at $122, which was when I actually started the stock pitch. I didn't think the stock price would go up like 20% in a few months, and yeah.
Great, thank you. Greg, did you have a question for Jasper?
Yeah, Jasper, again, great job. A couple things for you. I think one, I'm always interested to see where idea generation comes from. What made you sort of key on this stock as being mispriced? Number one, and then number two, I'm really interested in your statement that you were conservative in your DCF. I want to know why, as opposed to being just trying to be accurate to what it is that you forecast. And I couldn't help but see, a company who's come off of significant growth, and you're projecting it under a sort of 5-year hold period to be sort of flat at the EBIT level. That doesn't normally correlate to stocks that do incredibly well. So I just wanted to sort of check in with what makes you excited about a company whose profits you think will be pretty flat.
Yeah, so for my EV to EBITDA ratio, actually, the exit multiple, I actually used the industry median. Now the mean was actually higher, however, because there was one certain company who had like a super high multiple, therefore I used the median. And for future growth opportunities, yes, I definitely believe there are many future growth opportunities. As I talked about in the slide, you can see that they definitely have very attractive fundamentals. However, and they also have like such a good growth. However, the stock price is not reflecting their earnings, and I think this is mostly because the consensus believes that there are less growth opportunities, and the growth that Logitech has shown this year and last year, the huge growth rates are not going to sustain in the future. However, I feel like the consensus is definitely wrong with this point because there are definitely huge growth opportunities for Logitech, as I said, especially increase in workspaces due to the pandemic. As you can see in my slide, there are numerous large corporations, like for example Microsoft. They noted that 70% of workers actually wanted to be able to work from home after the pandemic. Therefore, increase in basis will definitely drive the future growth, and also my other three secular trends, which is video calls replacing audio calls, gaming becoming the most popular sport in the world, and entertainment shifting from big companies to small companies. And also, there are definitely huge growth opportunities in emerging markets and also new demographics.